Hey, welcome back. So, I want to talk about what just happened because honestly, it surprised me. Bitcoin is at 73K right now, and a few weeks ago we were at 66K. That's an 11% move. And I know a lot of people are watching this thinking, okay, is this real or is this a dead cat bounce? That's exactly what I want to get into today because there are some signals in this market right now that I think are genuinely important. And there's also a real risk case that some well known analysts are pointing to that I'm not going to ignore. By the end of this video, you will have a clear picture of both sides, what the bulls are seeing, what the bears are seeing, and where I personally stand right now. So let's get into it. Because there's one on chain number I'm going to show you, it actually blew my mind when I saw it. So make sure that you stick around. So look at this pattern on the daily chart. It's called an ascending triangle. The bottom line keeps making higher lows. That shows buyers defending price at higher and higher levels. And Bitcoin just broke above the upper trend line at around 73K. When this pattern breaks, and it just did, the measured target is around 89K. That's 18% above where we are right now. But here's the important part, the first real test is 75K. If we get a clean daily close above that, this starts to look a lot more serious. And the RSI, which tells you momentum, has gone from 15 back in February to 63 right now. That's one of the fastest recoveries from oversold we've seen in years. Now, the honest caveat, this move was heavily driven by short squeeze. 530 million in liquidations happened in 24 hours, and 80% of those were leveraged short positions getting wiped out. So some of this rally is bears getting punished, not fresh bars coming in. There's a difference, and I want to keep that front of mind. But here's the on-chain number that made me sit back in my chair. This one has nothing to do with the short squeeze. Hey, real quick, I partnered with Bitunix and the event is still live. New users get up to 40 USDT in future bonuses. Deposit 100 USDT, get up to 20 USDT. Place your first trade, get another 20, no KYC. Link is in the description, by the way. Now, here's the thing that got me. Bitcoin's daily transaction count just hit a 17-month high. We're talking 765,000 transactions per day. And here's the wild part, the number is actually higher than it was when Bitcoin was trading at 120,000. One analyst put it simply, the network is showing bull market behavior. Think about what that means. The price is at 73K, but the actual usage of Bitcoin network is at levels we only saw during the peak of the last bull run. That's not a short squeeze, that's organic activity. And then there's the MVRV score. 2 months ago, it was at 0.39, then 0.50, then 0.60. Now it's at 0.67. It keeps climbing. This metric just tells you whether Bitcoin is cheap or expensive compared to what everyone actually paid. Anything below 1 is historically undervalued. We're still there but moving up consistently. Now the ETF picture. Today we saw 411 million flow into Bitcoin ETFs. Solid day. Total cumulative inflows now sit at $57.28 billion. Total assets under management back above $94 billion. BlackRock has had 4 straight days of inflows totaling 482 million, and the brand new Morgan Stanley ETF, which only launched on April 8th, already has 68 million in it. But, and I want to be honest about this, on Monday with Bitcoin surged to 74K, ETFs actually saw 291 million in outflows, mostly from Fidelity. That tells me some people use the rally to take profits. That's not a disaster, but it does mean this isn't a clean one-way institutional buying story right now. And now I want to talk about the bear case because some well-known analysts are calling for 50K, and I think you need to hear that side of the argument. Look, I always tell you both sides, so here's what the bears are saying. Several credible analysts are saying this bounce is not the bottom. They're calling it a short squeeze, which, as I mentioned, is partially true. They're pointing to a bear flag pattern still in play, and they're saying the final flush, the real capitulation, still hasn't happened. Their target is 50K to 60K, and honestly, I can't completely dismiss that. The Iran deal is still not fully done, it's still a ceasefire, not a peace argument. If that breaks down and oil spikes again, everything we've seen this week unwinds fast. fast. Here's what I will say though. The analysts who called 50k also acknowledge that institutional participation in this cycle means we might not see the typical 60% drawdown the past bear markets produced. Fidelity said the same thing earlier this month. Drawdowns this cycle are structurally less severe because of the ETF buying floors. So the bear case exists, but the floor beneath us is higher than it used to be, and that matters. The macro Iran deal talks are ongoing. Trump has said Iran wants to make a deal, but it can't involve nuclear weapons. Traders are railing on hope right now, not confirmation, so watch that closely. So here's where I'm at. I'll just be straight with you. Also, Bitunix deposit event is running. Deposit 100 USDT, hold 3 days, get a 100 USDT position voucher. Tiers go up to 2000 USDT, slots are limited. Link is in the description, by the way. So here's where I'm actually at. I think this rally is real, but it needs confirmation. The transaction count at 17th month high is not a short squeeze. The MVRV at 0.67 and still climbing is not a short squeeze. BlackRock buying for 4 straight days is not a short squeeze. Those are structural signals. But I'm also not going to pretend the risk case doesn't exist. Some smart people are calling for 50k. The Iran deal isn't confirmed. The ETF outflow on Monday while price was surging is something I'm watching. This rally needs a clean weekly close above 75k to feel real to me. So here's my actual plan. I held my full position through the drawdown. I'm not adding aggressively right here. I want to see 75k close confirmed on the weekly chart first. If that happens, I add. If we get rejected and fall back below 68k, I deploy dry powder at 65k and 60k. The thing I keep coming back to is this. Transaction count higher than 120,000, MVRV still in historic buy zone, fear and greed at 23, improving but still extreme fear, 94 billion in ETF assets, and a chart pattern that technically targets 89k. The market is sending mixed signals right now, but the underlying data is cleaner than the headline noise suggests. And in my experience, that's usually when the real move starts to build. Base case, 75k closes on the weekly, ascending triangle target of 89k comes into play. Iran deal gets done, oil falls, Fed gets room, we push toward and eventually through the 200-day EMA at 83k. Risk case, 75k rejects, Iran talks collapse, oil spikes, we retest 68k first. If that breaks, 60 to 50k becomes the conversation. Dry powder ready for both levels. The one level that matters, 75k weekly close, that's the line. Anyway, that's my honest read. Let me know what you think in the comments. I read all of them. Thank you so much for watching, and I will talk to you guys in the next video.